Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, it's expiration today, folks. Expiration for the indexes and equities. However, VIX expiration is next Wednesday. So this cycle we're seeing VIX expiration post regular expiration. VIX cash right around 33.40. Now that's in the middle of the range for the day. We did see it lower initially when we saw the SPX actually bouncing back. Now the SPX giving up a little ground, but still not giving up too much ground. So the VIX at the lower end of the range, well, coming off yesterday's high of 39.28, so significantly lower from yesterday's high. Still elevated from last week, though. And when you look at 30-day realized volatility, I think that's one of the driving factors here. Right around 34%. So we're seeing implied volatility pretty much tracking realized volatility. Looking at the roll market, we are seeing about 30 cents in premium there, contango between the front 2 months. Now, again, May's only got a couple days left. What's going to be interesting is next week, when we go into June expiration cycle, is that contango going to persist? And when you look at the futures curve here, pretty flat across the board. So it looks like this 33 level is the inflection point for the VIX futures. Looking at VVIX, measure implied volatility of the VIX options, 137. Now that's up on the week and up at 1 month highs. We did see it hit 149 yesterday. So we're seeing some demand here for VIX options as this market gave up a little ground earlier in the week, and it's still elevated relative to the VIX. The price action today is really in June. We're seeing a lot of activity there. And you look at the June strikes, we're looking at 40s, 42 halves, 50s, and 60s. Big volume there. So some rolling of positions or initiating of some out of the money call position, it appears. Next week, expiration for the VIX. Certainly focus on that early on. I also want to point out the Fed has kicked off their bond buying ETF initiative that was announced here the last couple of days. Now, I think that's part of the factor why we're seeing this price move in the market. So something to keep in mind now, the Fed is engaged in the market. Third thing, COVID-19 news. I think that's going to continue to drive volatility. Certainly the news this week was not particularly positive, and I think that's why we did see the market giving up a little ground.